This is InvestTalk. Independent thinking, shared success. Justin Klein and Steve Peasley stand ready to take your finance and investment questions and share their unbiased answers. InvestTalk is made possible by KPP Financial, a registered investment advisor firm serving clients throughout the United States. The clarity for your path forward starts now. Here is KPP Financial President, Financial Advisor, Steve Peasley.
Good afternoon, everybody, and welcome to InvestTalk. It is Friday, November 4th, 2022. November holds my favorite holiday, Thanksgiving. So the calendar doesn't lie. 3 weeks from now, winter will be here, Thanksgiving's going to be here, and we'll be moving on into the new year pretty soon. This year has been a pretty difficult year for the stock market. Pretty difficult. Winter is pretty, it's been pretty cold here in Southern California for us. It's been pretty cold. Up in the Bay Area, San Francisco, 62 degrees. That's pretty cold. Memphis is 81 degrees. That's warm this time of year. New York, 69. That's also warm for November. Pretty interesting. But it's been chilly for us. Chilly for us today was like 67 degrees in Southern California. So as an investor, we are also aware that 2022 has been a pretty bad year, pretty volatile market. And, I think the average portfolio is down between 20 and 30%, people's portfolio that are invested in the market. So it's not been very good. You've done better if you had value stocks and commodity type stocks. You would have you still had losses, but they're much less. But that's what we're dealing with, everybody. Just the way it is. I'm Steve Peasley. I'm here today to do this radio program and podcast to help you make the most of your portfolio strategy, of all the decisions you have to make. Sometimes the decision is not to make any decisions, just leave it alone. I look forward to talking to you about it. I want to talk to you. This is a 24-hour, 7 days a week call-in show, and the number never changes. It's always the same, 888-99-CHART. And, of course, I got a bunch of stuff to talk to you about. My focus point today concerns U.S. payrolls surge in October. What does that really tell us about the economy? You know what the Fed's trying to do. We all know that. Although the payroll numbers were better than expected, it marked the slowest pace of job gains since December of 2020. So the Fed is succeeding in slowing the economy. Now, how slow are they going to do it? Are they going to push it down? This is the problem. When they have rarely have they gotten right of stop pushing up rates in time to avoid a recession. And I'm pretty sure we're not going to avoid a recession. We were technically in a recession for two quarters in a row, but didn't feel like it, but we were. But, third quarter probably have growth. So no, it won't be 3 quarters in a row. Time permitting, I will also dig into some other topics. I wanted to talk about the payroll reports again, of course, but I want to talk about the layoffs at Twitter. Do you think that's, Elon Musk closed the deal and bought Twitter, and he's laying off about half the people? But he's not alone. There's other tech companies that are doing the same thing. And did you see the Powerball? It is Friday. We'll talk a little bit about $1.5 billion with a B. What would you do with all that money? It'd be fun to explore that a little bit. And finally, did you know that we mean the U.S., we are by far the largest oil producer in the world? So I'm going to talk about that a little bit. We are. But the oil industry is a very complex industry, and the whole system is difficult to figure out. So maybe we can clarify a little bit what's going on in there, why gasoline is high. Those are things we want to talk about, everybody. But, of course, you drive the show. It's wherever you want to take the show. You can ask any questions you want, as long as they're financial. I see we have some voice bank questions ready to play. How to determine a company's debt. Someone wants to talk about Advent Technologies Holdings. Also on the docket today, I will share highlights from the KPP Premium Newsletter. That's coming up at the halfway point. of the program. So I've got all this planned for the episode on this podcast, and I'm waiting for your live calls. 888-99-CHART, 888-992-4278. So how'd the market do today? We had a decent market. Dow was up 402 points, the Nasdaq up 132, and the S&P up 51. When the Fed announced their 0.75% increase, the market initially started to rally on them. It was starting to look pretty good. But then Chairman Powell in his press conference said, "Oh, we're not done. We're not near done." Market turned around, fell hard. So, but it bounced back today, which I thought was significant. I just thinking we're getting closer and closer to that bottom and that turning point. But of course, the Fed is not helping us, are they? They really are not. Okay, let's go ahead and take our first live call today. Let's talk to John in Florida. I want to talk about McAdees. Hi, John.
Hi, Steve. Thanks for taking the call. I appreciate what you guys do. I was calling about McDonald's. Wondering what you guys think about it and what a good entry point might be. And I also had an idea for your show. I was thinking everybody's been calling about you and Dustin having differing points of view. I thought it might be neat if you guys had time to do a show together and take calls and questions and give you different points of view.
We can do
on
that.
The show live. That'd be good.
Yeah, we've done that in the past, and I kind of like the idea, and we probably will. I think that's an excellent idea. I'll talk to Justin, and we'll set up some time where we'll do the show together. I think that'd be a good idea. So
I think that'd be neat.
Yeah, I appreciate the suggestion. Do you own McDonald's, or are you just thinking about buying it?
I was thinking about picking it up. As things start to slow down, I think people going out less, turning to cheaper alternatives like McDonald's. If they're out and about.
Isn't it funny how everybody badmouths with McDonald's and how the food is not the greatest, but McDonald's sells billions and billions and billions and continues to grow slowly because they can't do it. They're a $202 billion company. It can't grow fast. McDonald's has 40,031 restaurants, fast food restaurants, 40,000. They're going to open 1,494 new ones this year. I mean, you just can't beat their juggernaut of the food industry there. The thing that I don't like about McDonald's is they only pay a 2.2% dividend. They never paid a really big dividend. And that I just don't like it. And their PE ratio is like a 27, 28, and they have very slow growth. And the reason why it's high is because they're so steady as far as consistency, in their earnings and growing their earnings, and they always grow their earnings every year. So the time to pick up at McDonald's is when it's down. And right now it's right near its top. If I were you, I would see if we can get a nice little pullback in McDonald's. They had very good numbers, so they got down to $230 and then popped up to $270 within a month, this most recent month, because they had pretty good numbers. So I like McDonald's. I think it would be a good, solid thing to have in your portfolio and just leave it alone. But you want to pick it up cheaper if you can. That would be my suggestion. Appreciate the call. Let's go to Nick in Los Angeles. Hi, Nick.
Hey, Steve. How you doing? I'm calling about. So I recently got a couple dividend payments from some mutual funds, totaling about $5,000.
Okay.
Very concerned about the market right now, but obviously the market's down because Treasury rates are up.
Right.
And I'm looking at the curve, looking at the short-term interest rates, and I see the six-month U.S. Treasury notes yielding around 4.5%. And so I was thinking on Monday, if I bought $5,000 worth of this 6-month note, come May 7th, I should get my $5,000 back plus about $220.
Right.
And I was wondering, could I just do this in my Fidelity brokerage account? Just put in that symbol and just buy $5,000 worth, and that's how it will work? Is it that simple?
It's not. Unfortunately, it's not that simple. You're looking at treasuries.
Yeah.
It's not that simple. You can call up Fidelity and ask them how you can get a hold of them, of the treasuries. But most people go directly to the federal government called Federal Treasury Direct. That's what it's called, Treasury Direct, and you buy them directly from the government. Okay, and you fill out the paperwork. It's almost like opening a new account, and you fill out the paperwork. Okay. It's not complex, but you fill out the paperwork, and then what happens? And they'll say, well, they'll ask for your account, your savings account, checking account, and how much you want to buy for the next auction of 2-year notes or whatever note you want, and you mark off the box, and they just take the money and buy it, and then they put the interest back in your account, and so now you have an account with Treasury Direct, and you can put money in that and ask to buy more and more in different kinds of bonds. So it's like setting up a whole new account. Okay. And Fidelity will help you.
My question is, within Treasury Direct, I have an account. I put in $5,000. In 6 months' time, it should be $5,200 something dollars. $5,000 plus 4.5%.
Yeah, when you put it in there, they're going to ask you, what do you want to buy? And you have to pick your 2-year Treasury, 1-year, 5-year, 10-year, and whatever that bond pays is what you'll get. And then when it matures, you get the money back, all the money back in your account. What they will do, though, is ask, would you like to roll it over? So like if you had a 2-year, when 2-year gets close to expiring, they say, hey, you want to roll it over to another 2-year? And you can hit a box and it rolls over. Or they'll just send all the money back into your account. But you get paid the interest every year. Thanks for the call. Appreciate it. Thanks, Nick. It's Friday, so the weekend's here. Almost here. In the meantime, you must have a financial investment question you want answered. Give me a call. Remember, you set the agenda. 888-99-CHART. This is InvestTalk.
Why do listener questions make InvestTalk better?
Which of these would you recommend?
Because each caller presents fresh questions in their voice.
I was curious if you still think aluminum has a ways to go from here.
When do I know the right time to take profits?
Should I be looking for an exit? Should I be holding here?
And listeners instinctively realize that InvestTalk uniquely offers a welcome dose of investing satisfaction.
I think you have a terrific show, and I've learned a whole lot.
Hey guys, love your show. I've been listening for several years now, and I've learned a lot.
Justin Klein and Steve Peasley understand what investors need and want.
I would look at it from a tax perspective. If there's no tax implications, move on, find better ways to use that money.
I'm going with the odds. I think a half position now would at least get you in it and get you watching it so you won't lose track of it.
Don't forget to call InvestTalk. 888-99-CHART.
Now, each time I host the InvestTalk podcast, I have the satisfaction of taking caller questions and then breaking down the often complex dynamics involved. If you've never called, don't hold back. You can leave your InvestTalk questions on the 24/7 anytime listener line at 888-99-CHART.
888-992-4278. Okay, U.S. payroll surged 261,000 in October, better than expected as hiring remains strong. So, non-farm payrolls grew by 261,000 in October, better than expected. The expectation was at 205,000. The unemployment rate moved higher, 3.7% from like 3.5 or so. It's kind of interesting. It moved higher, and the participation rate, labor participation rate, grew higher too. So it's just a weird situation. Big gainers in the job were in healthcare, professional and technical services, and leisure and hospitality. Our average hourly earnings rose 0.4% for the month. That's up 4.7% from a year ago. So salaries are creeping up, and that has been going on. What's interesting, if you look at a 1-year chart, month by month by month, and look at the jobs, you can see there's a definitely trend downward for a number of new jobs. Even though we are still producing new jobs, but the trend is down. And I think that is pretty much a result of the Fed pushing hard interest rates higher, and higher interest rates hurt the tech industry the most. as far as investments, because they borrow a lot of money to grow their companies. Anybody that borrows lots of money to grow their companies, high interest rates hurts them the most because it costs. And I think that's eventually, there's a turning point where, you know what, this is just not going to, it's going to roll over and hit us hard if the Fed gets this wrong. It's as simple as that. It's going to do that if they get it wrong. And they have a history of getting it wrong. That's all it is. I'm not trying to badmouth them about it. That's just true. We're moving into a break. Call me. I'm ready to take your questions. 888-99-CHART.
And I've got a question about warrant shares. I think that's the right term.
Got a question for Steve or Justin? 888-99-CHART.
Each day, InvestTalk listeners submit their finance and investment questions via phone or email. Would you like your question to be put near the top of the list? Just take a minute or two to leave a review and rating for InvestTalk at iTunes. And be sure to include a brief question with your iTunes review comments.
888-99-CHART. Looking forward to your calls. Okay, on Fridays, I usually give you a quick rundown. On the numbers, but first I'm going to take a live call. Let's go to Matthew in Indiana. Hi, Matthew.
Hey, Steve. I was wondering what you thought about Southern Copper for a commodities play right now, and if now would be a good time to pick that up, and what an entry point would be on that. Ticker's SCCO.
Okay, Southern Copper Corporation engaged in the mining of copper, operating mining, smelting, refining facilities, Peru, Mexico. I like it. I think it's at a price that makes it very attractive. It's come down off its $80 price. That's where it seemed to have a lot of resistance. And now it hit about $45, and that seemed to be a spot where it was a lot of support. And now here it is at 53, coming off that. I kind of like the action of the chart. And they're going to make, the negative thing is they're going to make $4.39. They made $4.39 last year. This year, $3.04. And they're estimated to make the $2.87 next year. So that's the negative part. Prices coming down. But they pay a 6.5% dividend, and that is not in danger. And if we get a turnaround, and I think it will, I don't think, if you are patient, this is a good place to buy and hold on to this stock for a number of years. You're going to collect 6.5% on your money. And yeah, the stock will go up and down, but it has a more probability of going up over time than down. So why would you not want to take it? I mean, the return on equity is huge at 44%. They don't have a lot of debt. Management owns about 1%. Mutual funds own 27%. And mutual funds have been buying this for a year. I kind of like it. I do. I think it's a good place to buy. Okay? Good luck with it, Matthew. So as I said, on Fridays we go down, a quick rundown on the benchmark numbers for the various benchmarks. So the 2-year Treasury is paying 4.67% yield. Can you believe that? We haven't seen that in years. 2 years, 4.67%. Of course, you got inflation eating in it, right? Eats all of it, but that's a huge jump. Just remember, 45 weeks ago, not even a year ago, they were paying 0.64%. Now, the 10-year Treasury is paying 4.17. 10-year is paying less than the 2-year. 2 years paying higher than the 10-year. That's an inversion, the yield curve inversion, and that's pretty negative for the economy, and has been that way for some time. It's going to be very difficult to avoid a painful recession, in my opinion. It's going to be difficult. Okay, gold was priced at $1,673 an ounce. 2 weeks ago, it was $1,652. It had a really nice day, up like 3% today. What was it? I was looking at it. It was up 3.36%. Gold was up today. So it had a good day today. But gold has done virtually nothing this year. Virtually nothing. Why? Because the dollar has been very strong. Why? Because the Federal Reserve has been raising interest rates and attracting everybody to the dollar. When I say everybody, I'm talking about the world economy, world governments. But I also noted that central governments around the world are also stocking up on gold. Interesting. So we'll see how that plays out. Silver, $20.74 an ounce. 2 weeks ago it was $19.15. 6 weeks ago it was $18.85. So it's been moving up. So those are the precious metals and benchmark numbers for you. As I said at the top of the show, payrolls were up 261,000 new jobs for October. They expected 205, and month before is 315,000. So the unemployment rate is 3.7%. They expected it to be 3.5, and that was 3.5 a month ago. But I like the average hourly earnings. That was what really was nice. It's up. So that was a good thing. Okay? Now, on oil's still pretty high at $91.74 a barrel. 2 weeks ago it was $84. So gasoline prices are not going to come down very much. The national average for a price of gallon is gasoline is $3.79, down 3 cents compared to two weeks ago. 14 weeks ago is $4.25. So it is off its high. It is. In California, of course, we live in a different world out here. Our average gasoline is $5.40. 2 weeks ago it was $5.83 a gallon. So we always pay more here. There's really no good reason for that other than legislation and regulations. That's all that is. We shouldn't have to pay this much, but we do. Anyways, Iowa, you know how much they pay? Yeah, well, $3.56. Oh, well, I don't live in Iowa. We're moving into a break. I will be sharing highlights from the newest KPP Premium newsletter. That's coming up soon, so hang on. InvestTalk, 888-99-CHART.
Got a question for Steve or Justin?
I'm calling to ask you an opinion on an ETF called XLI.
And the question is, during the market downturn, do dividends stay fairly steady?
And I've got a question about warrant shares. I think that's the right term.
A warrant is a right to buy shares of stocks at a certain price.
What's your question? Now is a good time to call InvestTalk, 888-99-CHART.
Have you ever been to a comedy club show? Where they have open mic nights? This encouragement makes it possible for anyone to jump on stage and try their stand-up routine. In its own way, Shopify offers the same opportunity for business people. Shopify is the all-in-one commerce platform that makes it simple for anyone to step up, start up, run, and grow a successful business. Shopify makes it easy to sell to anyone from anywhere. You see, whether your thing is making vintage teas or concocting exotic recipes, you can start selling with Shopify by joining the platform that simplifies commerce. Take a moment and visualize just how easy Shopify can be. With Shopify, you'll create an online store in your vibe. You'll find new customers and then grow the following that keeps your loyal fans coming back to you. Shopify has all the sales channels sorted, so your business keeps growing, from an in-person POS system to an all-in-one e-commerce platform, even across social media platforms like TikTok, Facebook, and Instagram. And thanks to 24/7 support and free libraries full of educational content, Shopify is with you every step of the way. This is how, every minute of every day, new sellers around the world make their first sale with Shopify. And you will too. Sign up for your free trial at shopify.com/invest. All lowercase. Go to shopify.com/invest to start selling online today. Shopify.com/invest. There's one thing every successful small business owner knows. Finding and hiring the right people is very important. So they want to be 100% certain that they have access to the best qualified candidates available. That's where LinkedIn Jobs is essential. LinkedIn Jobs helps find the right people for your team faster and for free. It's easy to create a free job post on LinkedIn Jobs. To spread the word that you are hiring, add your job and the purple #hiring frame to your LinkedIn profile. And with LinkedIn Jobs, simple tools like screening questions make it effortless to focus on candidates with just the right skills and experience, so you can quickly prioritize who you'd like to interview and hire. This is why small businesses rate LinkedIn Jobs #1 for delivering quality hires versus leading competitors. Listen, you want to finish the year strong, and adding the right team member, the right hire, might help you do that. LinkedIn Jobs helps you find the qualified candidates you want to talk with faster. Post your job for free at linkedin.com/invest. That's linkedin.com/invest to post your job for free. Terms and conditions apply.
How about we heat things up tonight?
How so?
Get a little fresh, add some steam, sizzle, and spice.
Wait, you're talking about going to Outback again, aren't you? Fire things up at Outback Steakhouse. For a limited time, try our bloomin' fried shrimp or get fresh with our new strawberry salad. Go big with our bone-in ribeye or the filet and grilled shrimp on the barbie. Then cool off with a cucumber crush or peanut koala. Try them all before they're gone. Let's Outback.
The stock market is volatile. It's constantly changing. So how are you positioned? Is your portfolio properly balanced, or are you taking unnecessary risks? You can get guidance anytime for free if you go to InvestTalk.com and take the brief Riskalyze quiz.
Hey, my name is John Wesley, and I was just wondering if you guys talk about Advent Technologies, ADN. It was a SPAC, which all companies and SPACs got destroyed, but they have $782.1 million grant from Europe for the next 6 years.
Hey, that's it. Oh, I was waiting for the question. Advent Technologies, ADN, provides high-temperature protein exchange membranes and HTPM-based membrane electrode assemblies. Exactly, I have no idea what that means, but they lose money. They've always lost money. They've never made any money. It's a $106 million company, so it's a micro cap, a very small company. The good thing is they at least have sales, and they are growing their sales. This most recent quarter, they grew sales to $2.2 million from the quarter before that was 1.3. So they do have sales, but they don't have profits. They're not going to make money next year or the year after. Management owns 25% of the company. So it depends on what their growth prospects are, and I'd have to do a lot of research. It's a $2.07 stock, but it's hard to value it until they make money. How do you value a stock until it makes money? It's difficult. Many of these small companies don't make it. So, don't think that it's cheap at $2.07 that you're going to make money. That's not necessarily so. So I wouldn't be a buyer of it. The cash flow is negative 63 cents a share. It's just not strong enough for me. I would not do that. The KPP Premium Newsletter was finished today, and it will be distributed tomorrow morning, as we normally do every week. In the market conditions section, I explain the Federal Reserve announced on Wednesday that the federal funds target rate would increase by 0.75% to a target of 3.75% to 4%, the highest level since 2008, January 2008. The increase of 0.75 basis points, or 7.75%, was already expected in the market. And that's why the market initially rallied. So the stocks initially, following the announcement, rallied. Okay, but during the Chairman Powell's news conference, the market tried to gauge whether the Fed thinks it's implementing a less restrictive or more restrictive policy, and the market decided, turned it right around. Stocks fell sharply after the initial rally. Bonds bounced back. Traders on Thursday extended bets that rates will stay higher for longer. Derivatives market bets show that traders now think the Fed's benchmark will be raised to 5% next year. A month ago, the best guess was a peak about 4.5%. So now the market has to get used to that idea, has to settle into the prices at a higher, benchmark rate. Private payroll growth in October, as I mentioned before, was pretty darn good. ADP, the private sector payroll people, said that there was 239,000 jobs posted. But as I said, the official posted numbers were much higher than that at 261. Remember, the official includes government jobs, layoffs and hires, whereas the ADP is just private sector. Wages increased 7.7% in the annual basis on an annual basis from the previous month. Now, that's private payrolls, right? And there's a lot more detail in the newsletter. The stock ideas section, we highlighted a company that provides a range of products and services to customers. The products offered through its stores include merchandise and content that it purchased for resale, plus products offered by third-party sellers. It also manufactures and sells electronic devices. It is currently trading at $90 a share and could fall further. It has strong support around the 80s. And we'll see that support level probably come in. We probably will. Of course, we name names in the newsletter. We always do. There's always two stock ideas in the newsletter. And not necessarily stocks. Sometimes it's ETFs, it's not always just stocks. And these are just ideas to put on your, watch list. And we looked at the world's largest non-alcoholic beverage company was the second idea. It has a robust portfolio of 200 brands covering an array of categories, including carbonated soft drinks, water, sports, energy, juice, and coffee. Together with bottlers and distribution partners, the company sells, more than 200 in more than 200 different countries. So it's quite large. If you are a long-term blue chip investor, then this stock should be on your watch list. Near-term pressures remain, so investors must use caution when looking to start a position. And again, as I said, we always name names. It's there in the newsletter. Okay, you can subscribe. All you have to do is go to InvestTalk.com. That's InvestTalk.com with 2 T's. InvestTalk.com. Okay, we are the world's largest oil producers, the United States. How much does that mean? Well, how much? What is it? We produce 18.8 million barrels of oil. 18.8 million barrels of oil. Saudi Arabia, 10.84 million. Okay? We use 20.54 million. Now, so simple math tells you, well, we're just short. We're short a couple of million barrels. We need to get that from somewhere, right? It's not that simple because oil has different qualities. You got light sweet crude, you got medium crude, you got heavy crude, and each one of those has to be refined at different places. In some countries, like coming out of Saudi Arabia, it's usually all light sweet. Coming out of most of Texas, it's sweet. But like the oil sands in Canada is not. It's very sour. That's the term they use. So, it's very difficult what price is set for what oil. Also, Saudi Arabia, cost to get it out of the ground is like $31 a barrel, where it costs from, let's say, some of our oil fields are costing around $43 a barrel. Okay, so, ours costs more to get out of the ground, labor costs or whatever. It's a very complex system, this oil extraction. And when you have any interruptions in the system, it reverberates throughout the whole industry. So when I say that, let's say that the oil companies have all these leases on government land to explore for oil. Then, with a new regime, those leases either get cut or short or expire, and they don't get new leases. And they know that, right? The oil companies and the oil industry know that. This affects their money, where they're going to put their capital expenditures. And so it can't just turn on a dime. Well, what do you need them to pump more oil? It starts years before to get the new oil pumping. So it's a very complex international system. It's just not. Now, I'm not a pro-oil company guy. I am not. I'm not anti-oil company guy either. I'm just trying to explain how difficult it is, and you can't, politics gets in the way and say, well, just pump more oil. You just can't turn on a spigot. That's not how it works. It just doesn't work that way. It takes time and effort. So let's pivot to an InvestTalk voice question that came in earlier. You know the number, 888-99-CHART.
My name is Dan. My question was how you guys determine when you say that a company has a lot of debt or doesn't have much debt. How do you determine that? Thank you.
Okay. Well, we have software that gives us that. We buy software and we get that number from them. We don't really, and especially here on the air, we have to go by what other companies provide us as far as information on it. So, there's different kinds of debt a company has, long-term debt, short-term debt. And some companies, the debt is beneficial, and some companies, it's detrimental. It's not. If this was simple, it would make my life easy, all right? It is not simple. So, for instance, Advac Technology, a company that doesn't make any money, they are totally in debt. How much in debt? I don't see it on my systems. But if I go to like a Ford Motor Company, just to pick a company, I can see they have 182% debt. They have lots of debt on a Ford Motor Company. And while this has never made sense to me, if you have so much debt, why are you paying a dividend? Wouldn't you want to pay off the debt so you don't have that expense? And car companies always have had debt, always. Tech companies usually don't. A lot of them don't when they're successful. They don't. But they do have a lot of debt when they're trying to grow and trying to get started. There's a lot of debt they got to borrow. So debt is an issue that you need to study it. And where you get the numbers, well, they're all over the internet. But you got to also determine what kind of debt. If you have a company that borrows money and lends it out, like a bank, them having debt is a good thing. It's not. It's a complex system, everybody. The seasons are changing. Many parts of the country, especially in the West, are dipping into the 40s and 30s overnight. So winter's coming, but the only stock market forecast we can make with any assurance is that we're almost guaranteed we're going to have more volatility. That's all we can. We can't tell. I can tell you winter's coming, but I can't tell you what the market's going to do, but we'll get more volatility. That I can tell you. Now, volatility does not mean a bad thing. We have had lots of down volatility this year. It's been a pretty bad market year, but volatility also breeds opportunity, and you have to be ready for it. You have to think about it. All those companies you've been watching and been saying, well, I would like to own that company. Now that it's cheap enough, are you going to buy it now? You might get opportunities. That's what I mean by opportunities, to do that. Don't be afraid of it, as long as you've done your homework and it's a good, solid company. Now, here at KPP Financial, we like to think that we buy these companies when we think there's an opportunity. We buy them for ourselves just like we do for our clients. We buy the same stock, same price, same time. We want to be on the same side of the table as our clients. That's our goal. So all our investment strategies, we call it parallel investing, by the way, but all our investment strategies, every one of them, we try to participate exactly with our clients, same way, because I think that's the only way to go about doing it. I don't like to tell people, you go buy that and I won't. Why not? If I thought it was a good idea, why wouldn't I buy it? So we try to do that, and we make a very strong effort to do that. I think after speaking with Justin and I here at KPP Financial in Irvine, California, I think you'll have an understanding of how we're a little bit different than everybody else. We will take a look at your portfolio for free. Everybody will do that. That's nothing new. We also give you some guidance. What we do that might be different than other people do is that we'll try to determine how much risk you're taking in your portfolio and how much risk you want to take and make sure it matches up, that you're not taking more or less risk than you really want to take or should take. And we'll even guide you, after talking to you for a while, how much risk we think you should take. I mean, I have turned down clients because I think they want to take too much risk for where they are in life and what their financial condition is. I've had clients, prospective clients, come in and say, "Well, I'm borrowing money on my credit card and I want to invest it." I would never take that on as a client. Way too expensive money. So these are the kinds of things we can talk to you about if you give us opportunity to do so. We want to talk to you. We want to help you. We'll help you. So go to InvestTalk.com, hit the Contact Us button, send us an email, give us a call in our Irvine's office. Any way you want to contact us, you can. It's pretty simple. Okay? I've told you often that we get InvestTalk questions from all over the world. This next one came in from a listener from Denmark.
Hello, InvestTalk. This is Yannick from Denmark. I would like to ask you about the stock MKL, Markel Co. It's owned by Berkshire Hathaway. It's an insurance company. But I was wondering, they have so low earnings, so they have a PE ratio of above 400. Well, I was interested in this stock since Berkshire Hathaway bought it. Would like to hear your opinion. Thank you very much. Bye.
Okay, Berkshire Hathaway is a value investor, right? He doesn't like to overpay for stocks. And I'm not sure where you're getting that PE ratio from, because when I do the PE ratio, I get 14.5. It's a $1,211 per share stock. It's Merkel. MKL is a symbol. Offers specialty insurance products and programs for niche markets and also writes treaty reinsurance. Do you know what treaty reinsurance contracts? That's treaty reinsurance is insurance that insures other insurance companies. It's a treaty between insurance companies. So they write insurance to insure other companies, other insurance companies. They're going to make $82.99 in 2023 after making $61.91 this year. Last year they made $176 a share. And these treaty reinsurance, specialty, property, casualty insurance companies, they operate that way. One year they can lose tons of money. Another year they make tons of money. So it's a more volatile section of the insurance industry. So, depends. They don't pay a dividend, but it's all about trying to grow the stock price. I think it's probably a little too risky for most people. It's a $16 billion company. Probably leave that to the experts like Warren Buffett. On the next InvestTalk story, behind the question, could a classification system impose order on the expanding crypto universe? Legislation's covered. That's Monday. But now I'm Steve Peasley, and I'm ready to take your questions live at 888-99-CHART.
This is InvestTalk. Is your portfolio balanced? Is it optimized? Is it delivering the types of gains you want and need to achieve financial freedom? Well, turn up the volume because there are many questions that deserve unbiased answers. And Steve Peasley is here now, ready to take your calls live. 888-99-CHART.
Hey, is it a good time to buy a house or should I wait until 2023? Thank you so much. Bye.
Well, buying a house or your home is such a personal thing. It's very difficult to answer you specifically. But if we're going to answer generally, I would say you wait. Why? Well, interest rates are going to go up, mortgage rates are going to go up, and waiting doesn't help you there. It really doesn't. Unless you have lots of money to put down or you can pay cash, then you don't care. But mortgage rates are going to go up. But at the same time, we're moving from a seller's market to a buyer's market, meaning there's going to be a lot more models for sale, a lot more houses to look at, and you're going to have better pricing. You'll have, your buyer, and there are going to be a lot of houses on the market, and sellers are going to have to lower their prices to get their house sold. So if I was in the market for a home for myself, I would probably wait, okay? Knowing full well that I'm going to pay a really high mortgage rate than it was before, and at the same time, also knowing that I'm going to refinance that mortgage rate downward once rates start to come off again. Now, I don't think we're going to see mortgage rates low as we had before, 3.5. I don't see that for years and years and years and years. I don't see that. But I think, I could easily come down from where it is, but I think it's going to go up first. So it's really a personal thing. If you have lots of cash, yeah, I'd wait. I would definitely wait. Okay, Twitter laid off 3,700 of their 7,500 workforce. And of course, Elon Musk wants to change the tenor of Twitter. We all know that. And so now he's the owner and he can do whatever he wants. Remember, he's a pretty smart guy. But don't think Twitter is the only one that's being laid off of the tech companies. Amazon's going to be laying off, Qualcomm's laying off, Snap is going to be laying off, Meta is going to be laying off. All these people have hinted and announced layoffs in that tech sector. So don't think Twitter's the only one. Twitter just happens to be in the headline news. There's going to be a lot more. Powerball is supposed to be over $1.5 billion. Playing the lotto, Powerball. Next draw is Saturday, everybody. Of course, your odds of winning are minuscule. I don't play it myself. I like to play with the idea of what would I do with $1.5 billion. $1.5 billion. I mean, after you paid off everybody's houses that your relatives and friends that you want, after you bought whatever you want, you're going to have $1.4 billion. So it's not, you really got to think about that. And I would set up some charitable institutions. That's kind of how I would do it. I would set up my own, hire some bunch of attorneys and put money into those causes I really believe in, and that's how I would do it. But it's always fun to fantasize how you were going to do it. Okay? So maybe we can fit one more question in before we have to go over the day. So let's go ahead and try to do that.
Hi, Justin. This is Glenn in San Francisco. I just wanted to check in with you about the pullback in EQT. Bought it a few months back at 40. It shot up to close to 50. Now it's back to 38. And just wanted to see what you thought was driving this and whether this is a buying opportunity or just a hold. Thank you.
I think it's a buying opportunity. EQT Corporation engaged in exploration, production, and distribution of natural gas, oil to wholesalers, retailers, and customers. It's a $15 billion company. They made 93 cents a share in 2021. 2022, the estimate is $4.06. Next year, it's going to be $9.18, and it's a $41 stock. So, you're talking about 5 PE. Never been that low. Never. So I would take a look at the debt, but it doesn't look like it has a lot of debt. I take a look at other things, but it looks pretty attractive to me. I don't like the return on equity is only 3%, so there's something going on there that we need to look. We need to take a look. I'm Steve Peasley, and this completes another InvestTalk program. Justin Klein, I thank you for listening and encourage you to tell your friends and family members about our free download podcasts. Get your downloads anytime at iTunes, Google Play, and Spotify. Please be sure to review and rate us on iTunes. Your positive ratings helps our profile. We really appreciate that. We're up to 46.8 million downloads, people. Thank you very, very, very much. Independent thinking, shared success. This is InvestTalk. Enjoy your weekend, everybody.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial.